Ian Horowitz joins me here today. You can learn what his team is up to by heading over to equitywarehouse.com. That is equitywarehouse.com. We're going to be going a little all over the place. We're going to finally land on storage units. But before we do, Ian has kind of a story to tell regarding how you found your way to that. So really appreciate your time, Ian.
Yeah, I'm excited to be on here. I always enjoy sharing my story because I think a lot of people resonate with it, whether you're trying to leave a W 2 or you had a similar job that I did. And if we can do it, tell everybody we're two dumb firemen. We figured it out. Literally, anybody can figure this out.
Well, you got to give yourself more credit. Dumb firemen are in serious demand at the moment.
Yeah, they are in very serious demand. I worked out in Baltimore City. We did not have many wildland firefighter fires, but what I will tell you is that is legit work. What those guys are doing, going in there, climbing the mountains, living out there. I mean, literally, when those fires blow through, if they have to take cover, they literally sit under an aluminum blanket to protect themselves. And it's just, I look at it this way: they let prisoners do that job for work release. I'm out. Like that is absolute hard work. Running the bulldozer, sign me up. I don't mind pushing some dirt here and there, but what those guys do climbing them mountains, man, that's a lot of work.
Yeah, my father was a volunteer fireman he retired, but some of the stories he tells, even on that level, is pretty crazy.
Yeah, well, I mean, sometimes you're seeing people at their absolute worst moment, and there's a lot of chaos, and people are relying on you. But a lot of that translate back to business and owning a business, and we didn't realize that until later on. We started as volunteers, and it was like, wow, I didn't realize all these things that we did. And then we went and became career firemen. It was like, oh my god, like looking back on it, it's like we were in people's like biggest time and need to help them, and it puts you in some really unique situations, some good, some bad, some really ugly, but you're there doing your job. And one thing that we have over the cops is people like firemen. So that's the only good thing that we have going for them. And they're usually appreciative that we've showed up to help mitigate a situation.
You kind of beat me to the punch. I was going to ask you what type of skills or training did you think you brought to this your current business?
Yeah, I would say like from becoming a fireman to getting into real estate, and it's taken a while now for us to look back and reflect, but there's a few things. One is, we had SOPs, we had organizations, so there's a standard operating procedure. And while it wasn't the cleanest cut over here, we'd always go back, all right, well, we figured this out, let's build a procedure around it, right? Like we learned the task, let's give a procedure to our employees. And our teams, some are maybe a little over 15 employees right now, and, as we've grown, it's like, okay, well, we know about span of control and saying, hey, like this person can only manage this many people, right? So organizational chart. But I think the real key takeaway that we have from being a fireman and in our business, and follow me along here, but we couldn't leave until that fire was out, right? Like we showed up on the scene, we were there till the very end. We made sure that that fire is completely out. There's no more emergency, and the scene's like secure and safe and stabilized. Well, it's the same thing in our real estate business. Like, I'm gonna put myself down here, but it's in a positive way. We were dumb enough to get up every day and go put the fires out in our business. Most people give up when it gets hard. They're like, "Oh, let me just throw money at the problem. I quit." It was the house that I bought. It wasn't the right one. That the realtor screwed me. It's like, no, we bought this house. We get up, we go, and we do it over and over and over again. We kept putting the fires out. We kept getting up and going and do it every day. And I think that's the biggest learning lesson that we took away, that, you got to get up. You got a problem, you got to go put the fire out, dude. You got to go and actively work to resolve your issues to then be able to grow to the next level.
This has been a consistent story regarding SOPs and documenting it seems like that majority of the people that I would consider successful have taken the time to do just that. It seems like things will start to fall apart if you don't take that cautionary step.
Yeah, and look, I'm not a saint. You're not going to come here and find some like operating manual that lives inside of our company and it's all perfectly organized. But we have systems and processes in place that have been passed along. They've been documented. Some of them have been written down. Some of them are recorded. Some of them are, okay, this is Raquel's process. And if she ever leaves us, then the next person that comes in and manages our properties, that person knows exactly what to do. But with that being said, is like you can't scale, you can't expand. And a lot of this I didn't learn until we started buying commercial real estate. It's hard to expand to that next level when you're doing everything and you're the stop, right? Like everything's got to flow through you. You can't grow. And if you want to grow, you need to let go. It's a part of business, it's a part of life. There's some really good books out there right now that I've read 2 or 3 times at this point, and they were not released that long ago. Who Not How. I'm like, "Oh, Buy Back Your Time" by Dan Martell. I mean, there's just such really good content around that, and it makes you think. And it's this simple task that you're like, "Oh, it takes me 2 seconds," but that 2 seconds then could potentially derail your whole day if a problem arises at doing that. And also is, if I gotta sit down and I gotta make a graphic, like as simple as the graphic is on my hat, right? Buffed energy. If I had to sit down and make that graphic, that would take me weeks. I went on Upwork, said, "Hey, I got this idea for this energy drink company, whatever." Is a whole other side story. "Hey, can you make this logo?" It was back in 20 minutes, right? When you find the right people, the right talent, it allows you to be free to be able to go do what we do best. And my best thing to do is we raise capital and I find real estate deals that we can purchase. And that's what we do really well.
That's some really good points. I especially like your phrase there. If you want to grow, you got to let go.
Yeah, and that dude,
Oh,
listen, that's years, right? Like we're 10, this will be year number 11 in April. We probably didn't learn that until like 7, 8 years in, right? We bought a 76 unit apartment building. We had done a bunch of single family houses, hundreds of them, knew them by the back of our hand. And, we had hired a project manager and some maintenance guys here and there, but nothing too sophisticated. We bought a 76 unit apartment building. My head blew. I was just like, I can't deal with all the tenants. My business partner's like, I can't handle all the accounting. And we brought Raquel in and she handled all the tenant ledgers. She handled all the rent collections, the calls, getting the maintenance requests to our project manager, doing the evictions. And it was like, real estate's not that bad. She has great rapport with our tenants. It makes the world go round. And actually, I bet you our customer service probably improved. Therefore, our rent collections probably improved as she came on board.
so how long were you doing single family before you moved into the storage units?
Let's see. So we started buying real estate in 2014. I had bought some stuff on my own in 2012 and 2013. My business partner was wholesaling in 12 and 13, and then we joined forces in 14. We grew up together. We both wanted to be big city firemen. We were experiencing furloughs, messing with our pension, changing our work schedule, healthcare issues, everything you can imagine. We worked for Baltimore City. It's a step above Detroit. And we're like, "Oh, well, if Detroit's pension system went bankrupt, we better figure something out." So we started buying real estate. I started doing single family rentals in the subsidized market space. My business partner started in the wholesale space. And then he came across a portfolio and said, "Hey, I want to wholesale the 3 and flip the 4th one. You want to do it with me?" And I said, "Sure." And boom, there we go. We made 6 figures on that deal and said, "Oh my God, how do we do this again?" And it was pretty much from 14 till about 2019, a solid 5 years of us just grinding away, refining our process, learning how to talk to banks, getting cash in the bank, refining our operational process, putting team members in place, understanding what we wanted to do. And then the right opportunity came up where we could buy a 76 unit apartment building. And the lady was willing to owner finance 90% of it. It was like, wow, commercial real estate's where it's at. Like that allowed us to quit our jobs. Right around the same time, we really started to figure out that we're bankable, that we understood what was going on, and as COVID hit, we started buying self-storage because we wanted to diversify from the market. So it was a really long way to answer, about 5 years.
Your camera's still on.
It was about 5, 6 years of us going hard at single family real estate, refining our process, allowing us to take that step into commercial real estate.
This is one of those things like people kind of expect when they get into real estate investing to do what you did, start with single family homes and trade up to something larger eventually. Would you recommend that's where most people start, or in hindsight, would you have jumped into commercial property sooner?
My maturity level would not have allowed me to buy commercial real estate when I first started. Dude, I had a 500 credit score. I was still figuring out life. If I would have made that much money then, I would have spent every single dime, right? Like it just, my maturity level wasn't there to handle it. I do believe that certain individuals can step right into commercial real estate. You can have any type of work background, but good work backgrounds that might relate to that is an accountant that's going to buy a multifamily asset, hand it right to a property manager, and he can see the metrics and just watch that play through. A lawyer, right? Like they got contract negotiation background that they might understand a little bit better. We had to take all those steps to get where we are. So really understanding and knowing who you are, there's a lot more content out here than there was then. I mean, I read 2 paperback books, and then this is 2014, right? Like 2012, 2014. YouTube University isn't what it is today. Bigger Pockets is a thing, but I couldn't keep track of all of it. So I do think there's a lot more knowledge accessible to people today that will allow them to be more successful quick. But then again, maybe you need to refine it. And most people don't graduate from single family real estate to commercial real estate because what happens? Oh, they get way too comfortable, right? Oh, I got 100 houses. Why am I going to take that next step, right? And what it takes to go from like 0 to a million to 5 and 5 to 10, you might have to blow up your business and start over. Like it was really, really uncomfortable for us to go buy a commercial real estate asset because it's like, I don't know what we're doing. What do you mean? I got to go get my own survey and my own phase one and the contract. Like my money goes hard. Like, what does all this mean? Right. And most people don't want to get uncomfortable again because it is almost like literally starting over. Yes, you have a knowledge base, but it's a whole new set of language. It's a whole new set of operations that you need to be able to be willing to navigate. And too many people get too comfortable and they don't want to get uncomfortable to get to that next level.
That first property that you talked about, you said that she was willing to carry back 90%, which is frankly unheard of in many situations. How did you find that particular opportunity? Was it presented to you, or did you just kind of fall into it?
Yeah, so at that point, this is 2020, right? So we're 6 years in, right? We're grinding away. We would go to the real estate meetup meetings. I got tired of people asking me questions. We have about 100 rentals at this point. We had flipped about 100 houses. People would call us. Like we were, I won't say the who's who, but people knew us in Baltimore and we were taking action. And I wrote a book. It's called Subsidized. I think it's still on Amazon. It's around here somewhere about subsidized housing. And I was marketing it a little bit, not really my thing. I just preferred to do real estate. And one day I get a phone call from a buddy of mine. He's a wholesaler. And he says, "Hey man, I got this apartment building. It's 76 units. You want to buy it?" I said, "Shane, like, dude, why aren't you buying this?" He's like, "Well, that's not what we do." And I was like, "Okay, what do you want?" He's like, "I just want to make a fee." I said, "All right, well, that's really mature of you because I wouldn't be able to say no." Cool. So we go and meet the lady. Oh, and at the end of the phone call, he goes, "By the way, she wants to owner finance 90% of it." I said, "Wait, what?" He's like, "Yeah, I'll tell you about it later." So I walk over to my business partner's office. I said, "Dan, Shane just called me and said he's got a 76 unit apartment building and the lady wants to owner finance 90% of it. Um, I'm going to go take this meeting tomorrow." He's like, "Well, yeah, bull crap. No way." There's a lot more explicitives that came out of his mouth. And I said, "Well, I'm going to the meeting. And whether you want to come with me or not, I'm going." He's like, "All right, I'll be there." So we found the deal through the wholesaler. We met her, we had conversation, and we actually, what she was doing was she would go on Facebook and see everybody that was commenting in like the local city page, like it was Baltimore Investor Networks or something like that, or Maryland Investor Network. I forget the name of the Facebook page. And she would watch who was commenting and transacting deals and putting content out there. And so what happened was she actually interviewed a few of us in the area and she decided to go with someone else. And I said, "Yeah, that's really weird. Like we had great rapport. She worked in the prisons as a corrections type person. She had family members that were in the fire service. I thought we made a great connection." And it felt really weird to me that she didn't go with us. So I called her about 60 days later. We were working on another deal. I said, "Hey, Judy, I know you're coming into some money. Would you be interested in investing with us?" And she said, actually, I'm not coming into money because the deal still isn't closed. We're still not in contract. And I think I screwed up. I want to sell it to you. And I said, well, that's not why I'm calling, but okay. We went to our lawyer's office the next day and ratified the whole deal. And that's how we ended up getting the deal. I know there's a lot there, but I can give you the metrics of why she wanted to owner finance it too. Or
Because this is one of those things that I get on my soapbox about. That we need to stop negotiating on the other person's behalf. You don't know what their motivation is. You don't know what the possibility could be. Let them lay it
uh,
out for you.
dude, 100%, right? So 2 eyes, 2 ears, 1 mouth, right? Like that was always told to you in the fire service. You listen to the senior man, you watch what he's doing, and you don't say a word. So when we went and met with her, we sat down the first time before we went to her lawyer's office and we listened to her. And she kept saying, my mom owns the property. Me and my sister are going to inherit it. It cost her $20,000 a month to pay for in care home, and we get zero distributions from the property because the management company was literally, I don't want to say stealing, but they were playing the accounting game to make sure that she got no money. So all $50,000 every month, this was a debt-free property in this family since the 60s. They weren't getting a single dollar of distribution. And I said, okay. And then I started doing the numbers and I said, well, Judy, I said, the way I could pay you more money than everybody else is if I extend the amortization period and I will get you that $20,000 a month so you can take care of your mother. And by us extending it, yeah, I'm going to pay a lot more in interest, but I'm going to pay less in principal. And when your mom passes, she was well on her way. It would happen way quicker than we planned. But I said, well, if your mom passes and then you want us to refinance, like there's still a lot of principal that then comes to you. Because if we would have done interest only, it wouldn't have got her the number that she needed. And this was the best way we could, because we didn't want the basis to be too high. So it was like kind of the best of both worlds. And we knew the way we were able to go back and win was when I called her that day and she's like, well, I think I messed up because this contract's taking way too long. Then she's like, I really need money to take care of my mother. And we said, well, we can close quick and, we'll start making payments immediately and $20,000 a month will start coming in so it can help take care of your mother. And that was the thing that allowed her to move. And then we bought it, we stabilized it, and then her mom passed. Literally right around the same time, President Biden was talking about messing with the inheritance tax, and she said, "I'm real uncomfortable about this." We refinanced her. Her and her sister walked away with almost $5 million, and we walked away with 7 figures that allowed us to quit our jobs. And she's now our biggest investor. Well, one of the biggest investors. She invests with us. She said, next day, she said, well, I gave my sister her money. I got my half of the money. What do I do now? I said, well, go invest it. And she's like, well, no, I'm asking you to invest with you. So this is like the sweetheart deal that allowed us to really dive deep into commercial real estate. It allowed us to use every skill set we have ever learned about negotiating, owner financing. It allowed us to quit our jobs, and it got us one of our biggest capital investors. And I think it's one of the coolest deals that we've ever done.
Just to remind everybody, head over to equitywarehouse.com, learn a little bit more about what Ian's team is up to there. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. You mentioned quite a bit of stuff there, especially regarding that creative financing and finding that seller motivation. What type of training have you been through, or did you find that some of this stuff come natural when it came to making this negotiation?
Most of it came through just general transactions, right? Like working through deals, having conversations, working on single family. Again, this goes back to my maturity level. I needed to do those 200 houses prior to this to end up here. Here's another thing. We had to raise $1 million for that deal, and people had lent us money, right? We really had to work really hard to raise that money. So this deal tested all of our skill sets from doing single family real estate, but listening to books, watching YouTube, just seeing case studies of other people, going to the local real estate meetup. Like I literally just restarted one because I'm like, that's where all this stuff happened, right? Like it might seem elementary sometimes when you walk in there, but I promise you there's always one good refresher. You hear the guy talking about I do subject to. I don't do that. That's stupid. You can never do that. And then you stumble on the one deal that you can do a subject to on, right? So it's good
Mhm.
to go to the local real estate meetup and just hear the conversations and staying in it all the time and being almost obsessed with it, I think is what allowed us to have the skill sets at that point to execute on this deal. And, how many times have you had people on your show? I'm sure have you heard this in real estate is, well, all the best deals are in the follow-up, right? This is the best deal that
Mhm.
one of the best deals we've ever done. And where did it come from? Follow-up lead. Prior to that, all of our best wholesale deals were follow-up. Hey, I'm thinking about selling it. And then we would follow up and like, oh, I never sold it, but yeah, thanks for calling back. And that's what happened here. Hey, Judy, I know you're coming into some money. Are you interested in investing in a different deal? And then she said, well, no, I want to sell you this. And that was the best follow-up phone call.
Well, that's a big amen on that. It's one of those things that it's always striking to me that, well, two things: how much people will consume. It's strange to run into people who admitted that they've binged your shows, and then you ask them like, "Well, what? Tell me about your last deal," and they haven't done anything. Or, but what I really want to mention here is that you are a perfect example. Everybody talks about Rich Dad Poor Dad. That book has changed quite a few lives when it comes to real estate investing or get people in the right proper mindset. But it's really rare for somebody to share a story such as yours where you adapted to the situation and found that money making. You didn't avoid the money making activity that was in front of you. Your wholesaler brought this to you and said, "This isn't what we do." He had just as much of an opportunity and a chance and let it slip. I'd have to think, has he ever mentioned like kicking himself over that?
I think he's come to a couple of them. We've had some small mastermind events, and he's come to a few of them, and he's mentioned, "Hey, you've done really well." But you got to remember, when I cashed her out, like he borrows money to go flip houses, and I think he's equally as excited because he helped her sell this apartment building that she didn't know how to go about it. She didn't have to pay him a dime. We paid him a buyer's fee, 50 grand. In the grand scheme of things, it was a $5 million purchase, right? Like it seems little, but we helped him at that time. And I think he had a little partnership issue going on at the time. They didn't know which way they were going. So, you know, he's never come out and be like, damn, I should have bought that one. But I do think he got a lot of ancillary benefits from it, right? He got the 50 grand in real time. He was able to borrow more money from Judy to go flip more houses. She now has like an allegiance to him because he helped her out, right? It's actually a good question. I should call Shane one day and just be like, hey man, what do you think? But we've remained friendly and I think it was just perfect. It was what everybody needed at that time, right?
Well, let's spend a little time on what you're doing today in your current business, which is the storage units. Do you acquire these properties yourself or do you build from scratch? What does that look like?
Yeah, so for a period of time, we've been buying storage facilities. We've been grinding it out, mom and pop operations that we can go in, stabilize through management, clean them up, renovate them, get them stabilized and sold. And one thing, and we're doing these out of our network. And, this is real time, real data that I'm going to give you guys. Look, we did really well. A lot of our stuff's down in the Southeast. I'm up here in the freezing cold Northeast. I don't know why I'm looking out my window and it's snowing. I don't know why I live here, but it's beautiful. And, so we bought a bunch of stuff out of state. It gave us market diversity and it was awesome. And storage is a really good asset class. You can make it passive. There's work that goes into it, but you can make it passive. It's relatively speaking not as demanding as residential real estate, right? Like there's no consumer goods being dealt with. We're dealing with lien laws. We're dealing with metal boxes. My biggest problem is someone steals something, right? Or moves into the wrong unit. With that being said, we've done really well in our current state and we're in the process of selling off these assets. And our next move is to go and actually build them, as you mentioned, because that's the next evolution in our business is stepping into developing properties. Um, for a few reasons. One, you have multiple dispositions that you can take with it. Number two, there's a big buyer pool for brand new product. a lot of stock, publicly traded companies that are chewing the product up. And we want to do it inside of our metro market between Philadelphia and Baltimore. That's the MSAs that we want to work in a few hour radius of here because we know the path of progress. But overall, like if I was going to buy, like go back to your question even earlier when you said, could you buy commercial real estate early on? I think I could have bought a storage facility early on. Like there's some stuff to it, but again, it's a business that can be systematized and operated, you know, from afar, from your phone with a pretty simple management company and management operations in place to execute on.
Well, talk about the numbers in your market because that's one of those things that is especially interesting with your market. I've just run into a lot of people that, to be blunt, that it's a bit averse to your part of the world just because of the cost of living and the cost of things.
Yep. So that's actually like a real statement because it's true for us too. The reason we picked up and went and found storage facilities in the Southeast United States, granted it was during COVID and I have a little different opinion on things, business continue to operate. But from a numbers standpoint, yeah, it's like exponentially cheaper to operate down there. But guess what? Your rents are exponentially cheaper. So when I'm looking at deals trying to dip our toe in and we're trying to stay in the $1 to $5 million range and everything around me is in the $5 to $20 million range, I'm like, I can't do this. I can't get the numbers to work. I can't make this happen. Right. And, that's really what was the catalyst behind us going south. When we went south, yeah, we bought a bunch of stuff. We bought them at low basis. There's upside, but it's all relative. The markets are all relative. It took us buying all that product down there to then say, you know what, we've done well, but it's not in our backyard. We do really well when things are in our backyard, when they're in our control. We know everybody. We know the jurisdictions that we're operating in. We know the path of progress. And so what if the return's a 0.5% less or 1% less? That's fine. I can sleep at night knowing it's in my backyard, knowing that our operation lives and breathes all around here. Although it's harder to develop up here in the Northeast, there's a lot of red tape, a lot of big metro cities. Infill products really hard to find and come by, but these cities are so big and they're expanding. And sure, there's cities in the South that are too, but the dollar amounts that follow what's expanding here, you can watch single family houses going up and they're starting in the eights and nines. That means that's 1.2 million. You know, you can go and follow that and say, okay, well, if I put a storage facility here, I know that I can get higher rates. Whereas in like Louisiana, new developments are going up and they're still selling houses, starting homes in the 200 single family homes, still starting in the $250,000 price range.
Mhm. What do you got baking that people need to be aware of?
Yeah. So one thing we learned in storage is we really enjoy it. We enjoy the warehousing side of things. We enjoy the product type. So one of our storage facilities was almost set up more like a flex space, short-term leases, but a lot of businesses in there. And what we found out is that's who we resonate the best with. People who are businesses that are like us, that are growing, that are executing. So we just recently bought a 55,000 square foot old office building right outside the Philadelphia submarket. And we're converting that to flex space. It's 11 units and we have a condo plan. So not only can we lease it, we can also sell it to owner users and exit the property in several different ways. We can lease up the whole place, sell it all off as one. We can sell individual units off to business operators and go about our business that way. So we've been concentrating a lot on new development self-storage where we can put REITs in. We've been concentrating in the flex space, which is it's an offshoot of self-storage, just it's longer term leases. Just we're dealing with longer term leases, less in and out, nice clean product, metal buildings, easy to operate, easy to clean, easy to renovate, and actually really easy to fill.
Yeah, that's a kind of a hot product even in my market right now. You drive down the interstate and I've seen quite a few of the flex buildings popping up lately.
Well, and that's correlated back to the self-storage, right? Because as these e-com businesses or a multitude of businesses, especially during COVID, they downsized. They said, I don't need a 20,000 square foot warehouse anymore. And 10,000 square feet of that is, or 5,000 square feet of that is office. Office can work from home. and I want my trucks inside. So maybe they consolidated down to a storage unit, and then they regrew their business. And they're like, well, this time I'm only going to house my trucks inside. Or the e-com businesses have grown and they need more warehousing. Everybody's getting rock salt all over their trucks. They want to keep the trucks inside where they're warm. They're not getting beat up. They're not getting snowed and rained on. And then the whole other side of that is the theft. Things aren't getting stolen off the trucks anymore because they're parked inside. The warehouse across the street from where I'm sitting used to be the old Philadelphia Inquirer building. They used to distribute the paper out of there. Now, what is it? Guy who has a chemical spraying company for lawns. He's got 45 trucks in there. Why'd you move? He said, I got sick and tired of my trucks getting broken into and sitting out in the weather and rotting away. I wanted to park them inside and I was willing to pay for that. So that's where a lot of demand's coming from. You also got like personal car collectors that are buying up units and taking up flex space. A buddy of mine out in Ohio, I said, "Oh, where are you?" Because he used to work from home all the time. He's in storage, and I said, "Well, you gonna get an office? Yeah, I get an office one day." And he called me the other day. He's like, "Yeah, I just bought a flex condo." I said, "What?" He's like, "Yeah, wanted a place to put a golf simulator, have an office, and just like almost like a men's club." So there's a multitude of demand type for the flex space, and I think that's what's interesting. And it also provides like multiple exit strategies because a lot of business owners want to own their units and a lot of them lease them. And I can't sell you the storage unit, but if I set up a new flex development, and I know they're going to sell off some of them, I can set up a condo association and sell you the units. So I think long term flex and storage as a whole are probably two of the best asset classes to live in. And again, as long as e-com is going to be as hot as it is, I mean, everybody sees the distribution warehouses going up all over this country. Where we are just north of us is halfway between Philadelphia and New York, and they're going up. So I would assume that you're going to continue to see growth in that space as a whole.
Well, this is really a fantastic conversation, Ian. Before we jump into the rapid fire questions and close out this episode, is there a question or thought we should have tried to cover before we switch?
What's your audience type? And then with the follow-up to that, what I would say is it's almost a rhetorical question because it doesn't matter if you're the most seasoned investor or you're a brand new investor, go swing the bat, right? We talked about it. Going from if you're trying to get off the sidelines, you got to go swing the bat, dude. Like just get in there, go do it. I'm not asking you to lose money and just go randomly buy something. But if you sat on the sidelines for years listening to this show or anything else, if this is the first time you're listening and you're just cruising, go do it, dude. Me and my business partner, we got no college education, barely got out of high school. We were government workers and we got almost $100 million of real estate. It's insane, right? Like you got to get up and just go. And if I never took a risk on that first property, buying it, renovating it, and putting a Section 8 tenant in there, and if Dan never took risk on putting up a bandit sign and wholesaling a house in the ghetto of Baltimore for $1,500 profit, we wouldn't be sitting here today. And if you're in business today, what I would say is if you want to go do commercial real estate or you want to go to the next level, get uncomfortable, blow up your operation. Say, what do I got to do to go from $1 million of revenue to $5 million of revenue? Oh, it's completely different. Go do it. Stop being comfortable. Get uncomfortable. Go do it. So
Just a reminder, equitywarehouse.com, equitywarehouse.com. That's going to be a clickable link in the show notes. But if you're ready, Ian, we'll jump into a few rapid fire questions and close out this episode.
all right, let's do it.
Well, the first one is, what lie do real estate investors sometimes tell themselves?
How much money they're making, right? Oh, I made $3,500 this year on this rental property. Okay, well, what about all the reserves you got to put away to replace the water heater, the windows, the roofs, and everything else? You didn't make that. Yeah, I know that's what cash came into your bank account, but that's not how much money you made.
If you could go back in time and give your younger self one piece of advice, what would it be?
I would say get into commercial real estate earlier. I think that's really the biggest one. We had a couple opportunities early on and we shied away from them. And I think if we would have stepped into it sooner, we would have quit our job sooner. And maybe I would have been on your show sooner.
Do you have a book recommendation?
Actually, the book I'm reading right now is, what is it, Jekyll Island or something about, yeah. I'm halfway through that one. I enjoyed. If you like some conspiracy stuff, it uncovers a lot of good facts. So I'm about halfway through. Other than that, I think Warren Buffett's, and I'm not like I don't fanboy him, but I like his title. It's The Snowball Effect, right? And it's his biography. And the one thing the man has is time. He has way more time than all of us. And you see all the bumps and bruises he took, but the one thing he didn't was he never stopped doing his core business of buying stocks. Our core business is buying real estate. And if we keep rolling the ball down the hill, you're going to make your snowball so big, something breaks off. It's going to happen, but the snowball is still rolling down the hill. You're still making money.
What single strategy or tool have you implemented that has had the biggest impact to you or your business?
Hiring an executive assistant, again, it goes back to kind of what we talked about earlier in the show. Just the minutia items. It takes you 2 minutes, takes you 2 minutes. Next, you have 2 minutes turns into 2 hours because you got sidetracked and everything else. That came from reading Who Not How and Buy Back Your Time. Who Not How gave you a really good framework of why you should do it. And Buy Back Your Time really gave you the framework to what action items you can take to implement someone. And I think that's the number one thing that I did to help me save time.
I was going to ask you earlier, when you were starting to hire your employees, was that kind of a mental shift, or did you have to go through an exercise to see them as an investment instead of an expense?
Yeah, I mean, you gotta remember the first employee we hired, we're making $55,000 in the fire department and, we're offering him $60,000. And I'm like, I don't know how we're gonna afford this, right? Real estate investors don't know how much money they're making, right? Most don't spend the time on the accounting. And that point of our lives, we had it somewhat dialed. We understood cash flows, but maybe not completely. And it was like, wow, how am I gonna handle this? But the day we hired Ryan, it was like, wow, guy runs our whole operation. He invests side by side with us in deals. And it's become a beautiful relationship. But looking back on it, it was really scary day one. And then the day he came on, it was like freedom. And it was like, okay, now we get to work on all the other crap that we avoided: tax planning, K1s, forecasting, how many more houses do we need in the next few months? Where am we going to get money from? Banking, like all the stuff that we avoided for so long. He freed up our time to allow us to do that and move to the next level.
Well, Ian, this is a fantastic conversation. I really appreciate your time. I hope you'll consider coming back again sometime. It's equitywarehouse.com. That's going to be a clickable link in the show notes, but really appreciate it. Thanks for your time today.
Yeah, man, I had a blast. I'm glad you let me talk, but I guess that's the point of podcasts. So I enjoyed talking, and I hope this story helps somebody else and gets them off the sidelines. And, if you want to check out equitywarehouse.com, I tell everybody you can learn how to co-invest and co-lend with us. But if you're a real estate investor and you want to figure out how to raise money, just hack what we're doing, figure out what we've done, set it up and go utilize it for yourself. That's what we did. We studied everybody else's marketing material, went out and executed on it. And that's why we're here today. So I absolutely would love to come back if you'll have me. And I appreciate you letting me come on and talk to your audience.